All right. First and foremost, every Forex trader must have a template in their head. And how you go about having a template is you have a well thought out plan. You have to basically know what you're doing. Now, I don't know what concept many of you employ. I go for what is called the smart money concepts because I believe that, as the name suggests, you're going to be trading the market in a smart manner. So we start off by looking at the bigger picture first, and then we navigate down to what we look for in terms of our entry. Now, for those who would have gotten in on the Forex market, let's take a look at gold to kick things off. First and foremost, you identify the direction of the trend. But there's one more important step that many persons often overlook. Where are the stop losses? Right? And why this is an important factor? Well, in terms of a swing move, a long-term trade move, many smart money investors are going to hold out for maximum profits. And there are various intervals in which many traders enter in on the asset price, depending on at a retracement, case in point right here, so, or the market price made a substantial pullback and then began to continue to rise even further, like right here, so. Now, majority of smart money investors undoubtedly would have entered the market around this region. So most of the stop losses are resting here. And we got the subsequent buy off, right? Now, at what point is the market price in terms of buy volume or buy pressure or buy breakout, whatever you want to call it, is going to reach what we call a targeted price area? And then it appears to us, the investor, that market price is going to either A, make a directional change, or B, continuing to go higher. This is where confirmation comes in. But at the same time, we should consider the stops. Now, for those who sold, their stop losses are here. For those who bought, their stop losses are here. A good substantial amount of the buyers, many of them have already collected their money, but at the same time, many have re-entered the market and, are still present. So not only are from the initial move, the initial buy-off, many stop losses here, but upon seeing that the market price was in fact going to be going higher, many stop losses are also around this region, which brings us into liquidity and so on, but not going to touch there yet. But if I could start off from this point, I could say that many persons entered here, rightfully so, upon seeing a clear rejection of market price failing to go down. So stop losses are at this region as well, which brings us to the three zones in terms of a market trend or market range. We have the discount area, the middle zone or the equilibrium, halfway point, and then we have the premium. All right. So given that the trend currently is bullish, two things can happen. Either the market price makes a directional change in which we see a wipeout of the earlier move that the market price made, or we see price continue to break higher, searching for that true target area. Remember, as market speculators, you're waiting for a true confirmation of where price is going to head to. But it is important for you as a Forex trader to mark out these specific areas. Now, this is the core basics. But now that I'm on the H4 chart, especially for this new week, I have to plot out some very important zones. So now I go on the H1. Some people can stay on the H4 and do it, but I like to show step by step to my students the thought process behind this. So we understand that there's a lot of stop losses in this region. Some persons got taken out by this pullback. Others re-entered upon market price making this move, right? Keeping it simple right now. But let's just work with this line here. Now, what was the lowest and the highest your market price made for the previous week? Very important piece of analysis to be done there. So today, right here, so this is Tuesday. Yesterday is Monday. So we start off by marking the low that was made on Monday. And we're going to also mark the market open that kickstarted this week. We're going to mark the highest here asset price has gone to for the Monday. And also the highest here asset price has gone to for this week so far. And a quick walk around memory lane, you would have realized the lowest year market price made last week. Which date now? Let me see now. Let's start off. So this is Monday, Tuesday, Wednesday. Okay. Thursday, Friday, and here we are now. So the low that was made last week was on the Monday. Highest here that was made was on Friday. So we are currently below the high that was made the previous week. And as of this present moment, the market price has given us the highest here for what? Tuesday. Basic stuff. Don't overcomplicate your trading. Now, take a look at where asset price is currently right now. We saw the move that the market price made on Tuesday after establishing the high. We saw our market price made a tremendous look of sell-off, and here we are for our current market area. Now, this is where the speculations become, well, versed, if I could word it that way. Two options are facing you. Option number one, and it also depends on which session the move actually gives you a break. We want to see the lowest area for Tuesday get taken out, but at the same time, we want to see market price stay below that zone. Now, let's mark out Tuesday's open price as well. That's a key area on the chart. And let's pull it over on an intraday perspective. Now, what's happening at this present moment? Asset price is showing me varying disparities. I'm seeing where asset price is showing that high of last week respected, and asset price seemingly struggling to make higher highs, because I'm seeing direct pushes towards the bearish side. Now, my bias is building up to say sell. But should I sell right now based on what I'm seeing and hope for the best? Or should I do a more in-depth analysis to see what exactly is taking place? Which brings me to a smaller time frame. I have my targeted area set, but there's a certain structure that I need to see that is going to confirm to me, the investor, that yes, your asset price is in fact going in the direction of your bias. Now, where is the asset price now? Discount or premium? In terms of the current move, it's at a discounted area. So it makes absolutely no sense for me to jump in and say, all right, I'm going to be placing a sell right now. And then if the market price shoots up on me, I have no one to blame but myself, right? So the principle behind this now is I'm going to look to see rejection. Now, rejection can come at many key areas on the chart, but we look for it at areas of price liquidity. Now, right above me, I have my Tuesday open. Then I have my Monday open. Okay. Can start off now. Annotating the chart. Give yourself an understanding of what's happening. But every time I press one control, I always press the wrong symbol. Work with me just a bit. And this is the Tuesday open. All right, perfect. So what next? I got my current zone. Got the market formula all sorted out. I need some confirmation. M1 chart now. I'm going to first start off by marking out what is called my initial data. Right here, so, is the highest zone market price has gone to for current 28th of February. Right here says the current low. Current market price is at 20.60. I'm going to mark also my time price formula now, where my Tokyo session starts. And exactly 1 hour after Tokyo session has started. Why am I doing this? I'm setting up what is going to be my initial price range or my initial scope of activity going forward. It's quite simple. Judging by the parameters that I've currently set, market price can either A, push towards the bullish side and take out the stop losses from those who sold right here, so. Or market price is going to fail to break higher and then target the stop losses of those who are here. Now, a lot of persons stop losses who bought on an intraday level from this point is here. But at the same time, many of these persons are looking to raid those who sold up here. So the market maker now can seek to push the price up towards the bullish side, take out a couple of these guys who are at break even, induce buying, trap buyers at the top, and by later sessions, potentially London or New York, I see the market price make a break towards the lower areas. Now, depending on which one of these key zones the market price either breaks through or rejects, meaning that it becomes mitigated, fails to break through, I can take a key entry at that point once I see criteria match up for me to enter. If I do not see the criteria match up to take that entry, and I'm going to be taking the entry on the M1 chart, I'm not taking it. Now, what about right now? Many people probably asking, Darren, can't you place a trade right now? I do not like what I'm currently seeing. Had I been on the chart look earlier, for example, and rightfully so, saw this move as choppy as it was, I would have taken a quick look at sell because I would have seen evidence of price going down. As it stands right now, price is moving too weak, too choppy for me. I want to see a little bit of build up in the overall activity for me to say, all right, let's see what's going to happen between now and the next hour. I know that many persons are buying right now, but I do not like the current structure of what I'm seeing. I love to see a setup that literally screams sell or buy. If I don't see that, I'm leaving it alone. Okay? That's the simplicity behind my analysis right now. Anybody lost? Not following so far? Please let me know. Okay. Seems like everybody is on the right page so far. All right. Now, but that's just basically it for now. All right. Guys, have any questions? Please post them in the group or inbox me one away. All right. But the process is laid bare.